Hey all, welcome to Share Trek. This is Raj here, and as always, Sandeep is with me to do the spotlight on. I think this week we are going to do Intellia, which is one of the requests, and probably next week we'll look at PACB. We had to confirm that with Sandeep towards the end. And Sandeep, thanks for joining us once again and giving your time this week. Welcome.
Feels great to be here. Thank you again for having me, and I look forward to talking about our company.
So, friends, I think with this, we should get started. Welcome back, friends. So without further ado, I'm going to hand over to Sandeep so that he can walk us through his analysis of Intellia. Off you go, Sandeep.
Thank you very much, Raj. Great to be here. Intellia was actually a viewer request, so thank you very much for putting in these requests. They are great. They give us much more focus, and they give us a chance to make the streams much more interactive and much better and much enjoyable for all of us. So wonderful. Please keep the requests coming. So Intellia, it is what I believe is one of the big cornerstone companies in the genomics world, up there with CRISPR, with Beam Therapeutics. And at one point, it was the company with the largest market cap of all the genomics companies. It was in the Russell 2000. It was one of the top holdings, and still is one of the top holdings of ARK Invest and ARK Invest genomics fund, ARK-G. And since then, since that point, way back in 2020, 2021, when it was trading for above $100 or close to $100, it has taken a really significant haircut. It has shaved off a lot. And just a couple weeks ago, just about a week ago, it was trading at its 52-week low of about $22 NTLA, which is a very steep fall. And we as fundamental investors, I want to know, why is that? Why is this company that was so beloved, that had so much going for it, had a massive market cap, was a revenue machine, why is this taking such a big tumble, big beating? So what we like to do, first of all, and we take a look at its earnings statements. One thing I really liked about Intellia, by the way, was its earnings statements. The company lets us view it in Adobe, in Microsoft Word, in Excel, which is very convenient because not everyone likes the same sort of viewing metric. So what I like to do is, first of all, I like to look at the statement of cash flows. See, does this company have enough cash, and is there enough cash to fund its operations? We can see that its net loss actually decreased a wee bit from the prior year, which is very nice. By the way, with cash flow, we have this, and then we add in some of those things being depreciation. So as we go down, we can see that it has a cash position, enough free cash, which has declined quite a bit since the beginning of the year, where it had about a half billion in cash. Now it's down to a little under 200,000, but maybe that's enough. It has to all be relative to something. So $183 million of cash for Intellia Therapeutics. What we like to do then is go back to our balance sheet, and we can see some of its current liabilities. How much? So these are some of the, bills that are coming up within the next 12 months. We can see that it has about $100 million in bills, if you will. With its current cash position, it's got enough bills, enough money to fund its current operations. So another thing that I noticed is this company did a really good job in the last little while of cutting down some of its expenses. We can see that its current liabilities just a few months ago was significantly higher, about a quarter higher, and it's cut it down. How did it cut all those bills down? I went through and I read some much more of the earnings, and I found out this company did a really large share dilution of about 360 million shares, which a lot of people are going to be really discouraged about. But we also have to remember the reason why we have the stock market. The reason why the stock market exists is actually so companies can can have another way to generate and get a bunch of cash through offering equity rather than offering debt. And this is the real purpose of the stock market. So although it really, really is not too favorable for people who currently own the stock, this is what the stock market was made for. So 360 million shares generated a lot of revenue, but this company still has, what I've learned from its earnings, 175 million of those shares left. So it can still continue to dilute if it needs to. However, continuing on, as I was reading some of the conclusionary statements of Intellia, it says it has enough cash right now to fund at least the next 12 months of operations. That is a good thing. As a shareholder, I like to hear that. I like to hear that it's not going to need to go to the bank and dilute shareholders because it's okay right now. And me, as someone who kind of be waiting on the sidelines, these are some of the things that I like to hear because it makes me think this is starting to get well capitalized. Although it's a money-losing company, these are some of the positive notes. So, as I mentioned, this company is starting to become much more efficient. I wish it did it a wee bit earlier, but it has been able to cut down a whole bunch of its expenses. However, its revenue did fall, whereas its research and development and general administrative costs, did increase by about 23%. That sounds really, really rough. However, so this is why I like to read as well and not just look at the numbers. That was actually what happened. One of their largest partners, Regeneron, when Regeneron came in and gave it a whole slew of money to work on their research, to work on their general administrative, they get to write that off slowly over time. So I did math, about 20% of that 23% increase was actually from the Regeneron money that came in prior. So that's really nice. It makes us realize that, hey, this company isn't just spending like crazy. It's got a plan, and this is being written off for accounting reasons. Another thing that I realized and that I thought was really cool with NTLA is this company is purchasing a lot of treasury stock. So this is kind of in a way, not financial advice, but financial discussion channel. And everyone wants to know what's the next big investment. So I like to also see what are the big companies doing, and what the big companies doing right now are they're buying treasuries. I've noticed that they have bought treasury shares which range in between yields of 3.4 and 4.4%, which is very, very interesting. So I'm not saying that this is the best thing to do, but this is what they are doing, which is great for them. And they can sell those off in the future and get much more cash. So as we look to their revenue, what I have done here is, I'm going to pull this up. I have broken down its revenue. So Intellia Therapeutics makes in this quarter, this is just per quarter, about $13.5 million in revenue. And from reading their earnings and from reading how much money they get from their earnings in that earnings call, I have broken down how that kind of goes through. Most of it comes from Regeneron. About 54%, over half, comes from this really, really big giant of a company we call Regeneron. About $7.3 million in revenue. The second part comes from this company called Avencell, which is an immuno-oncology CAR T therapy company that uses the CAR T CRISPR technology that Intellia provides and uses that to help out some of its clients. Regeneron, by the way, uses its genomics for, as they put in their earnings, mainly for in some of their liver treatments. Another about 4% of their revenue comes from this ocular eye care therapy company called Sparing Vision. And Editas has kind of been seen as one of the companies that has been ahead in the eye care genomics therapy thing. But this is really cool for me to see that Intellia is also partnered up with one of these companies. The other less than 1% of revenue come from really much smaller partners, which is Caverna and ONK Therapeutics. The amount of money they get from this is very minimal, but it's still something. But this also makes me think about risks, where almost all of their revenue comes from two massive partners. Although one of these partners in Regeneron is very, very well capitalized, it means that this company in Intellia, their clients have a lot of bargaining power, where most of their revenue comes from just a couple clients. So suppose you were selling cereal or something, and you sell all your cereal to Walmart. Walmart has so much power over you that you, as a cereal producer in the cereal mines of Antarctica or wherever you get cereal from, Walmart can charge whatever margin they can. So that's something to consider as a partner, as an investor. They don't have a lot of clients. They have two major ones and three smaller ones. So that's something to consider. Another thing, as I was listening to their earnings call, is one thing that, when talking about risks, almost all of the risks that Intellia spoke about were in external risks, where they were talking about the risks of government, of taxes, risks of biotech and the public's perception of biotech, risks of how much interest rates are affecting their capital and how much they're affecting their money. These are all external risks. But when the CEO was talking about the actual Intellia Therapeutics, I just heard such optimism. I heard brightness. The person was really excited. They were excited to talk about biotech, excited to talk about what the company is doing. And was so nice, so uplifting to hear. So this company, although there are a lot of external issues, which, especially in terms of macro environment with like interest rates and trade issues and all these things that we might not have a lot of influence on individually, this company is very, very positive, very, very optimistic about what it is doing. And that's what I'd like to see. So what I'd also like to share here is if we were to take a quick look at the company over here, when they reported way back here in August, it was trading at close to $40 a share. Since then, it has been cut in half almost. Now, a lot of that was because of share dilution. I believe this is one of the points where they diluted shares. However, it has seen a uptick recently. I think some of that uptick was because CRISPR, this lovely company, reported a blow-away wonderful earnings. And all these related companies, they like to move together. They like to move in groups, which is nice. This company, however, Intellia Therapeutics, is expecting to report earnings on November 9th. I read through its prior earnings, and these are some things I'd like to consider, and I'm going to be taking a look at in their upcoming earnings. So I want to know, how does the cash position change? It's got enough cash to meet its current liabilities, but we also have to consider it's going to need another 105 million, give or take, to meet its long-term liabilities in the next year. And although it says it's gained a lot of cash through and is cash well, in fact, since it's came to the market, it has picked up quite a lot of dollars in cash for operations. I want to know, has that cash position changed? And another big thing I want to consider is there going to be any more share dilution? Is the company going to deploy any more of that $175 million in shares that they have available? And another thing I want to really consider is their lease liabilities. Right now, their leases make up for quite a significant portion of their long-term debt. Can they renew some of these leases at a more favorable rate? Right now, they're paying over 8% on their leases, which is quite a lot. In addition to that, I want to hear more about what the company's doing and how close are they to getting out there in the market and getting approvals. But more on the finance side, this is some things I want to consider. Now, what I'd like to do next here, in addition to considering all of that optimism from the shareholder presentation, I'd like to hear Raj's thoughts on NTLA, hear what he thinks based off some of the capitalization issues that I have brought up, and consider what he knows about their upcoming pipeline. Hear what he thinks. Do you think that Intellia Therapeutics is in a great spot, in a not so great spot, or in a wonderful share trek spot? So yes,
so it's interesting because the lease thing that you spoke about, right? So at this point of time, maybe they could consider possibilities to reduce their lease costs. That's something that they may have to look at.
Yeah.
And if they got another 175 million more available to dilute, and if their cash runway is just 12 months, so I'm pretty sure that at the end of 12 months, they may want to dilute unless they monetize one of their therapies.
Yeah.
And I don't see them monetizing by the end of the year any of the therapies. So let us quickly have a look at their website. Let me go to Intellia.
Very interesting investor relations page for Intellia.
I've gone into their, let me share the screen with you.
Please.
Share screen. And here we are. So this is the pipeline that they have. And their leading therapy is a collaboration with Regeneron for ATTR, that is NTLA 2001. So it's in a clinical trial at this point of time. And let us see if they give us a goal of when they're going to do it. It doesn't say anything out here. So definitely, if it was going to be a candidate by December of next year, they would have given some idea out here. Next is NTLA 2002. It's their fully owned therapy for HAE, or hereditary angioedema.
Yes.
Again, there has been breakthrough in terms of clearances from FDA to proceed further, but I don't see them accomplishing any of these two candidates in another 12 months into a monetization stage. And if we look at the other candidates, all of them are in early stages. Most of them are in preclinical, and a couple of them, I mean, 4 of them are in enabling stage. So they will definitely have to do some dilution, in my opinion. And yeah, I was also looking to another thing that you were talking about. That was that was their cash position. We spoke about equities. We also, you are saying that they had kept their money in treasuries, which I think will be handy for them. Because if I had money at this point of time, I would like to put it in treasuries, because as the yields go down, the face value of the treasury will go up. So if you recollect the SVB debacle, the bank had a run on its money and it had to close down. The problem for them was that they had bought treasuries when the interest rate was low.
Yes.
And as a result, the face value of their treasuries started dropping as interest rate went up. So if they were allowed to carry it to maturity, they would have been all right.
Yes.
But then people started saying we need the money now, and that created a problem for them. So the situation here for Intellia is different, because they have got the surplus cash which is parked into treasuries. And if we were to look at the current state of the market is in euphoria. It's expecting that interest rates will start going down, as a result of which the yields are starting to fall, which means the face value of the treasuries will go up. So Intellia will experience a boost out there. But is that cash? No, it's not. To realize the cash, they will have to sell. And they may want to sell that somewhere before the 12-month runway gets over. So they will get more money than what they put in. That is what I would say. On the other hand, they would also get a bit of relief, because if they have got borrowings on variable rates, then those rates will go down. Or if they have borrowed on bonds, they can reissue the bonds, take back the bonds, reissue it at a lower rate, and reduce their costs. So they have those options. And I would look forward to see in their next earnings that they are controlling their operational expenses. And like we have seen a few other companies controlling their operational expenses really good, the ones that have already reported. So if they were able to do that, that will be a positive that I'll see on Intellia. But again, looking at the current status, we cannot be carried away by the fact that all the genomic companies are going up, regardless of whoever they are. For the first time, we have seen our entire watch list go green. And I'm thinking it's because of the market expectations that the Fed is benign. They saw these employment numbers, and they saw the inflation numbers. And the Fed is thinking that, we are going to probably ease out into a soft landing or something like that, or, thread the needle, avoid recession. And so far, everybody is happy about that. But that can change at a dime, because we have got war going on in Israel and with Hamas. We got war going on with Ukraine and Russia. We could potentially have some issues with China and Taiwan if the US is stretched out. And we have political uncertainty in US, in my opinion, because there's a lot of litigation going on with regard to gerrymandering, with regard to voter suppression. So that's one battle. The other battle that is happening is Trump versus the United States in various courts for various things. And then we have the January 6th issues all happening separately. And then new revelations are coming about Mark Meadows, that he wrote a book in which probably it is lies, because he told something else to the Feds or FBI when he was interrogated, or Jan 6 investigator special counsel. So he's being sued by the book publisher. So it's a lot of mess out there. And whenever you have a country where there is a lot of political instability in the works, then the sovereign rating can also drop. If the sovereign rating drops, it can have an impact. So there's a whole lot of things
You on the
that the
bar.
market is choosing not to look at right now. And as a result of which, I think we are seeing the greens, but we should be careful, do a covered call wherever possible. Of course, this is not financial advice. This is just my personal opinion. Wherever
Yes.
I can, I'm going to do a covered call. I made the mistake of selling Berkshire Hathaway 2 weeks ago to book profits because I was invested on Canadian depository receipts, and there we don't have the call options. So we can't do a covered call or anything. So I had to sell to protect myself, but I'm unable to get back into the position because it's not going below my sales price. So probably on Monday, I'm just going to jump in whatever happens and stay put out there. So that's my thoughts, Sandeep. I deviated a little bit from Intellia to other things, but
No, it's good.
but to
Macro.
conclude, I would say that even though Intellia has gained in the market, just let me quickly show you
Yes, please.
the TradingView platform before I turn off. Let us see. Let me show you this here in the TradingView platform. We have seen a sharp increase, right? And if you look at technicals, what you look for when we are going into a bullish market is what is called as golden crosses. In golden crosses, the short-term exponential moving average or simple moving average crosses over to the top on top of a longer-term moving average, in this case, this red one is the 9-day exponential moving average, and this orange one is the 20-day exponential moving average. So we'll first see this crossover. Once that happens, that means we are in a bullish phase. That has not yet happened. It could happen on Monday or it may not happen. And in terms of momentum, we are already above average momentum. So that is good. MACD is also positive. But this is not because of any performance of Intellia, in my opinion. This
Yeah.
is because of the overall economic exuberance that has come with the employment numbers and the Fed speak all put together. So that can change anytime. So I would advise caution. Again, not financial advice, but just my personal opinion. So Sandeep, that's all I had to share from my side with regard to Intellia and a little bit of the broader perspective.
Yes. By the way, if any of our viewers want to see a very good video on bonds, Raj and his brother Kumar did a nice video on bonds. I believe it's on the Indian channel.
Oh, okay.
Yeah, I remember seeing that, and that was a
Thanks.
good video.
Thanks a lot.
But
I'll try and see if I can put it up here. Yeah.
yeah. And we could talk about bonds as well if our viewers want, but I'd like to talk more about the equities side. Intellia, wonderful company, beautiful company. It's experienced a little bit of a debt problem in recent years, but it seems like it's doing well right now. I want to wait until the earnings in a few days, but I personally prefer CRISPR. And looking at CRISPR's earnings, I think Intellia moved a little bit on CRISPR's optimism. So I prefer CRISPR. I think CRISPR has a better cash position, but I am interested in Intellia. I'm going to look at the earnings. Hopefully our friends will as well. Hopefully this is provide a little bit of a preview of some of the key points that would be important to look at in the earnings. But let's take a look. If we enter a bullish market, Intellia might be a catcher.
Yeah. So thanks a lot, Sandeep. Thanks for your wonderful analysis. And viewers, please let us know what you want to see. I think we have a request for PACB as well. So we'll consider that. And also, if you have any other share that you want Sandeep to have a look at,
yes, please.
Sandeep would be delighted. Sandeep is giving us some time every week. So that has improved the variety in our channel instead of just me talking about. So Sandeep, thank you very much for all of this.
Oh, you're welcome.
And I think that brings me to an end of this video. And
one more point,
please.
So these genomics companies, because many of them are money losing companies, I'm analyzing them a little bit differently, where I'm looking at, can they survive, and Raj does a good job of covering their pipeline, but I want to see, can they survive to when the pipeline gets in and when that revenue starts flowing. Just wanted to add that. Part of me, please.
No worries. No worries. So friends, I hope you enjoyed this video. I just want to thank you guys because we have crossed 5,000 subscribers in the English channel, and in our Hindi channel we have crossed 2,500 subscribers. And out there we have got around 18 members in our YouTube channel, and we have 4 Patreons in the English side. So thanks a lot to all of you for your support to this channel. I hope we continue to get your support. And we look forward to your comments on the video, and also recommendations or requests for the next stock to be analyzed by Sandeep. So
Yes.
thanks a lot and have a great day. We'll catch up with you again. Bye for now.
Bye, friendos.